Hello traders, Gary Wagner here. It is 12:35 in Honolulu, 5:35 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 15th day of December 2023, and this is the Weekend Review.
I want to start with the question that I'm getting from a lot of people in the markets, and the questions I have myself, which is, what changed between, say, the end of November, when it sounded like you and the chair were both saying, hey, it wasn't time to talk about rate cuts, and then what happened at the meeting where it sounded like the committee was talking about rate cuts and now projecting more of them for next year?
Well, first of all, we aren't really talking about rate cuts right now.
Really? On Wednesday, Chairman Powell revealed that 17 voting members are all predicting rate cut next year. There were 2 voting members that did not anticipate a rate cut. I am now assuming that one of them was Federal Reserve official John Williams.
In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026.
Today, gold did sell off fairly sharply, down $17.50, with the most active February contract currently fixed at $2,033.80. In terms of our long trade, we have been aggressively moving our stops up, moving it yesterday to $2,035. Obviously, the close underneath that price point indicates that we were stopped out, but stopped out with a small profit of $1,500 per COMEX contract, which raises a question, and that is whether or not the statement by Fed President John Williams initiated the sell-off in gold by causing the dollar to strengthen, by saying we're not talking about rate cuts, and influencing market sentiment. This, if true, would certainly mean that we could see a one-off in terms of today's sell-off and a return to a more bullish demeanor through next week. Silver pricing also declined, trading to a low today of $24.05, closing at $24.15.5, down 23 cents. However, our stop was not hit. We went long at $22.48 on Wednesday, and we raised our stop yesterday to $23.90. Dollar strength was a definitive component of the decline in both gold and silver today. The dollar is currently trading at 102.60 after gaining 0.62%. We're looking at a daily chart of gold futures. If you recall, on Wednesday, gold rose after the release of the statement and summary of economic projections to about 2020, but before Chairman Powell spoke, it was my belief that he would have to follow the track of the statement, especially considering the dot plot was so bullish with the mention of rate cuts. Because of that, we entered our long position. We got in at 2020, but because of the action we saw on Friday, the first day of December, when it rose dramatically, and then in Australia, we saw it open above that at 2,094, trade to 2152, and by the close of New York, closed well below that at 2047, became the primary reason that I was so aggressive in moving stops up on this trade, which could present us with an opportunity next week. If we see a further decline but support come in at a logical area, it would give us the opportunity to reposition ourselves for one last trade this year. As far as silver goes, we did raise our stop to $23.90, which will protect profits in the trade. We were looking to see whether or not silver could break and close above $24.38, the 38.2% fib retracement. It obviously did not today, But if I am correct, and the sell-off today was predicated by a single statement and not a real shift by the Federal Reserve, I do believe we could see silver close above this price point. It is resistance and trade as high as 25.13, the next level that we would want to watch, and react accordingly as trading resumes next week. However, for now, maintain your current long position in March silver as well as your stop at $23.90. Lastly, I do want to announce that we have entered a partnership in which you can buy gold and silver bullion directly from the Gold Forecast. If you go to thegoldforecast.com or any other page at the top, you'll see buy gold and silver bullion with a number to call or learn more, which will detail that we have formed a partnership with Liberty and Finance, which is a licensed dealer and representative for Miles Franklin Metals Investments, one of the oldest and most trusted dealers in the country. You'll work specifically with Elijah K. Johnson, who is the gentleman that I have been personally purchasing bullion from for years. I can say with 100% certainty that the customer service will be impeccable. We recommend that you work personally with Elijah for all your bullion needs. It will be more than competitive pricing, and your gold or silver will be drop shipped directly from the mint at Miles Franklin to your door. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for the next daily update and review. Have a great weekend. Bye-bye.